let me welcome once again Gerry Brooks, who is the chairman of the NGC Beaming, along with Dominic Rampersad, who is the president of Phoenix Spa Gas Processors. I just amend quickly, unrelated to this, Mr. Brooks is a very fancy dresser. I just had to put that in. Gentlemen, and let me start with Mr. Brooks here. What is the individual prerequisite for buying these shares?
There is no major prerequisite. Whether you are an individual that is an adult or a young man, and Rennie, let me just link it back to fathers and wish all fathers happy Father's Day. Mm-hmm. As a young parent, one of the things that you want to do is that you want to provide for your kids.
Yes.
It doesn't really matter where you start, it's where you're going. What's my objective? And then how do I build my family so that when I move on, my family's better placed than I am? And the TTNGL APO, Additional Public Offering, is a good share to do that. Because one of the things that you want to do in terms of financial planning is that you want to develop a financial portfolio. That portfolio may consist of your first home. Mm-hmm. Then you want to start thinking about education for your kids. And if your kids are 4, 5, 6, 7, 8, 9, 10, you may or may not have gate support, but you're going to have to think about university support.
That's right.
Then you may also want to think in terms of helping them to buy a home. The APO is an excellent vehicle for that, and TTNGL is an excellent vehicle for that. Why is that? Government is offering 40.2 million shares on the stock exchange. The share is generating a return of 7.14%. Mm-hmm. When I compare that share to what I earn in a commercial institution, I'm earning less than 1%.
Yes.
If I compare to other stocks on the local stock exchange, I'm earning generally between 3 and 4%. Manufacturing company stocks are generating about 3.8% return. Financial services stocks, Republic Bank, Sagicor, Scotia, those are around 4.1%. Unilever, Whitco, which are the dividend-paying stocks, are about 4.7, 4.8. Mm-hmm. Government paper on a 15 to 20-year basis is between 4.5 and 5.1%. Mm-hmm. This share, since its inception, when it was launched in October 2015, is generating 7.14% capital dividend yield. The capital appreciation, the share was launched at $20, so it's an affordable share. $20 per unit. You could go out and buy 10 for $200, 100 for $2,100. The share, and from a capital appreciation standpoint, because the mean value of the share has been about $22. Mm-hmm. So which means that your total return to date is around 20%, about 17, 18%. Nowhere are you getting that kind of return. So it's an excellent vehicle linking back to parents because it's affordable. You could take some in the APO and you could continuously top up every month, every 2 months, every 3 months, every 6 months, once a year. And that allows you to put aside a nest egg, which is giving you income twice a year. Mm-hmm. You get income in April, a dividend, and you get a dividend in August, September. Interestingly, you're not only getting a dividend possibly in TT dollars, but if you have aspirations to send your child to Canada or to the US, we have just passed the bylaws, it's the first time I ever saw shareholders vote unanimously with applause and stand up. That was at our TTNGL annual general meeting in April 2016, where we passed the bylaws to allow the company to pay dividends in US dollars. Mm-hmm. So you could receive one dividends in TT dollars. There's a potential to pay it in US dollars. If you're going to pay the dividends in US dollars and you're a shareholder, you have to go and establish a US dollar account. And we're going to do some work with the TTSC and the SEC to ensure that the administrative things are taken care of to enable us to make that payment in US dollars. Of course, we'll have to work with corporations soon to get the approval. So we are very enthused. It's a great share, and we'll talk a bit more about the underlying asset, Phoenix Spa Gas. We have a great management team there. We have taken $163 million in expenses out of the business. So this is a company, you quoted 88.4% improvement in the company's first quarter result. Mm-hmm. Normalized for 2016, the improvement was over 16%. This is a year in which 2016, if you recall, gas prices were less than $2. They were $1.88. Mm-hmm. Mm-hmm. Mount Bellevue, that is propane, butane, were also at low levels. Ammonia, methanol were at the lowest levels in a decade. Natural gasoline was gas was sub $3. In fact, it was $1.88. Oil was $28. This is February to May 2016.
And this amazing turnaround is consistent with what all those who have reviewed the situation in our gas companies have said. You've got to get efficient, cut out the waste, and produce more.
Very much so. And we were single-mindedly focused on that already. The management team was single-mindedly focused, and perhaps this is a good place for Dominic to come in terms of some of the things that we did to drive the asset and to improve performance, focusing on productivity and focusing on efficiency.
Dominic, he refers to as Dominic Rampersad. He is the president of Phoenix Park Gas Processors Limited. Dominic?
Yes, Rennie, as Mr. Brooks said, in 2016, the environment worldwide changed in the energy industry. And with the onset of the shale revolution in the United States, they brought a new way of being. And, we started 2016 on the assumption that the shale producers could not operate on an oil price lower than $75. They've been operating at $50 and still making a profit. And what they have done, which is similar to what we have done at Phoenix Park, and in fact within the entire NGC group, is that they have looked at their costs, they've looked at their efficiencies, and they've learned to do more with less. And this is what we did at Phoenix Park. And I'll give you a very simple example, Rennie. In 2016, our insurance policies came up for renewal. In the past, Phoenix Park would go out and renew its policy, and NGC would go out and renew its policy separately. We came together, we came to the market as one entity. Mr. Brooks and I and another gentleman called Mark Alfred made a 2-day trip to Houston and then to London.
He ain't tell you that. When we left Houston 5 o'clock in the evening, hit London and went straight to meetings. Straight to work.
Take note, guys. No vacation.
Straight to work. And we came back to Trinidad with a 25.2% reduction in our insurances.
Fantastic.
And that was for 2016. Our 2017 renewal, which we completed a week ago at Phoenix Park, showed a further 27% reduction. And that is just one example. We have cut out a lot of outsourcing. We do more on our own. We've regularized overtime. We've consolidated positions where we needed to. We've gone back and renewed and renegotiated service contracts at lower rates. And all of that, when you add it all together over a period of 2 years, added up to 163 million TT dollars in cost reductions. And you know what, Rennie? We didn't send a single person home at Phoenix Park. We did not send a single person home.
And that is what you talk about when you talk about managing efficiency with responsibility, because the responsibility is, as long as you put somebody on the bread line, we have created a problem somewhere else. It's almost like kicking the ball from this side to that side.
Correct.
We're going to delineate a little further on the situation with Phoenix Park and so on in just a moment. I just want to go back quickly to the APO in the area of, John, public may not understand what is a brokerage account, which is something he must have in order to make this purchase. That I want to find out what that is, and two, the cutoff time to subscribe to this APO.
The APO closes on June 28. My advice to people, if you don't have a share account, go into any one of the brokers now. As early as Tuesday morning, Republic Securities is the lead broker. First Citizens Brokerage on Wainwright Street in Sinclair, JMMB Securities, Boss Brokers, Subhash Ramkalawan, and by the way, all of the brokers independently. If you read Anthony Wilson's business column, if you read the Boss report, they have all recommended the TTNGL shares are buy.
Just go take it, yes.
Just go take it. Caribbean Stockbrokers with Alvin Johnson, West Indies Stockbrokers with Adrian Manmohan, Shepherd Securities, KSBM. You simply go into their offices, you fill out the form, you sign it. If you need to walk with your photo ID to be able to provide it to them, they will establish your account, and a day or two later, you just simply cut your check and say this is the number of shares that we subscribe for. 60% of the APO is reserved for individuals.
That's one of the wonderful things, because folks usually say whenever you have an offering like this going on, it's all about big business. They get the biggest cut. But in this case, allocation of 60% has been reserved for individual investors.
Rennie, many years ago, a gentleman came up to me and he kissed me. I said, friend, you can't kiss me. Right? This business about men kissing me, I'm not in that. What he did is that he actually bought shares and used the shares as the security with his credit union. So he went to the credit union, took a loan, used the shares as security, and used the dividends to pay for the shares. So it doesn't really, that's why I keep coming back to it. It doesn't matter where you start. You may want to start with 100 shares, 200 shares. 2,000 shares are reserved for you as individuals, per individual. So 60% of the allocation is for individuals, 10% is for mutual funds. Through your credit unions, they take another 15%. The NIB gets 10%, but the large percentile of the shares is really meant to deepen and widen the stock exchange to allow individuals to participate.
And put the ownership of the commanding heights of the economy in the hands of the citizenry, as it were.
Absolutely, Rennie.
The chairman of NGC, Gerry Brooks, is the voice you're hearing along with Mr. Dominic Rampersad. And I want to continue in this area, the ownership structure. It's one thing to go now and buy the shares, because I tell you, the last year you showed that you've got good management. You showed in the first quarter this year that you're doing good, you're well on your way. But what happens after I purchase my shares? So the question comes up, what will the ownership structure of TTNGL look like after this offer?
The ownership structure will look like 51% of that is owned by the NGC. 39% will be owned by TTNGL, which is members of the public. 75-25, 75 the public, 25% NGC. And then 10% is owned by a company called PanWest, which is a consortium of the UTC, the NIB, and NEL. Now, it's extremely important that NGC remain the driver of the company for a couple of reasons. One, we at the NGC are looking outward and we're changing the model of the company.
That's right.
Rennie, let me just link NGC back to Trinidad and Tobago. $20 billion of our revenue comes from the energy sector, or 45% of GDP. That has fallen because of product pricing, which declined in the last 2 years, and because of the quantum of production, gas in the main, from 4.2 BCF down to 3.3 BCF. If the countries were to get out of the 2.3% negative GDP, an important part of that driver, of that impetus, is the energy sector moving forward. So we need to get the energy sector back up from the 6 billion up to circa 20 billion so that we could move to positive GDP and improve per capita income and the fortunes of Trinidad and Tobago. What NGC is now doing is that NGC is diversifying in the value chain. So we are participating in the upstream with Shell, BP, etc. And we're doing a lot of work in terms of production and gas supply. You would have seen BP announce a couple of weeks ago that the new Angeline find. We are working closely with BP on that, and in fact, we signed the agreement with BP 2 weeks ago. You would have seen Juniper, which is going to bring about 590 million scuffs of gas. We've signed an agreement with 1A, 1B to bring 80 million scuffs of gas. Additionally, you'd have seen that Shell come into the jurisdiction, and Shell would have acquired Repsol and it would have acquired BG's assets. What are they saying to us is that we have about 1.1 billion BCF in new gas coming in stream. Let me just show you the arithmetic. 4.2 BCF is what we need for local and for export. Right now we are 3.3 BCF. We have Trinidad Regional Onshore Compression Project, which brings about 200 million scuffs. Juniper brings about 590. You have 1A, 1B, we have the smaller marginal field. So what we're actually doing is that we're working diligently to increase our gas production. What NGC also brings to TTNGL is the fact that because of our base of Phoenix Park, National Gas, National Energy, and CNG, it brings a shared services framework. And what that allows us to do is to reduce our costs. Equally important, when we're going overseas, when you go to Ghana, when you go to Cuba, when you go to Venezuela, when you go to Guyana, we are able to provide a full portfolio of energy-related services, which includes the fractionation from Phoenix Park, which includes the upstream and which also includes the downstream.
I like that. I'm sorry. Please go ahead.
No, please.
Yeah, what we just did is ensure that you understand that now that you've bought your shares, you're in good hands. You understand that. Just before I go back to you, Mr. Brooks, I want to go across to Mr. Rampersad for a moment. Usually it's good to walk on to what you have achieved and where you are and where you're going, but sometimes the genesis of the problem is needed to be understood. What caused the gas shortage in Trinidad and Tobago?
Well, I mean, it's well publicized. Multiple reasons. One,
I'd like to reiterate for clarity.
One is, lack of investment on the upstream. There were many years in which, the level of investment required on the upstream to replenish declining reserves were not done, and therefore the level of replenishment was lower. What we also saw as well was existing wells. Their levels of decline were a lot steeper than we had previously experienced, and therefore the rate of replenishment was a lot less than the decline.
So the wells were exhausted at a more rapid pace than anticipated.
Correct, and that's why the point that Mr. Brooks made around Angeline is so important.
Yes,
because the Angeline agreement provides a buffer for when some of the existing wells start to deplete, the Angeline wells would kick in.
Which around 2019.
2020. And therefore you keep a steady stream of gas.
Good enough. It's one thing usually. Here is what we have the challenge of. On the one hand, I have those who are on the baseball team, inside experts like yourself, understanding it. I have John Public who's trying to follow the game. So every now and again, I may ask for what seemed like a simple thing. Work it for our simple minds, just like that. What is this arrangement just entered into with Venezuela to ease the shortage? Can you just touch on that quickly for me?
I think Mr. Brooks will answer that.
We're going to be in Panama this week. One of the important things that the Prime Minister recognized, and full credit to him, is that there are two important fields available to Venezuela and to Trinidad. One field is the Dragon field, which is part of what they call the Mare Sucral Basin, which is made up of Patao, Mayunis, Rio Caribe, and Dragon. Those are 4 fields. Those 4 fields have 14.3 TCF of gas, trillion cubic feet. We have about 9.2 in right now in Trinidad and Tobago. The other interesting thing is Lauren Manatee has about 10 TCF, which is a cross-border field. Part of it is in Trinidad, part of it is in Venezuela. That's 10 TCF. What Dragon does is that it allows the possibility for about close to 3 TCF of gas to come to Trinidad and Tobago to be monetized. That will benefit Trinidad and Tobago, and it will benefit Venezuela. Why is that important? That's important because we have infrastructure here which is going to be able to pipe that gas straight down to Atlantic LNG and or to our domestic petrochemical network, and to be able to liberate that far earlier, as early as 2019, 2020. So it's a significant amount of gas. It benefits Venezuela and it benefits Trinidad and Tobago. Where are we? The Prime Minister signed a memorandum of understanding at a country level between the Bolivarian Republic of Venezuela and the government of Trinidad and Tobago. That was last year. In March this year, NGC signed an agreement with PDVSA, which is the Venezuelan oil company, Shell, and the NGC, which was a heads of agreement. That's going to be followed by a gas supply agreement and other technical agreements to be able to liberate and to evacuate that gas in a profitable manner for the benefit of the people of Trinidad and Tobago and for the benefit of the people of Venezuela. The Venezuelan team we are actually going to be meeting in Panama Thursday and Friday of this week. Our technical teams are hard at work. 3 teams have been formed. One is a technical team to look at the reservoir, the plateaus, the engineering, the piping, the metering, etc. The second team that's going to be formed is a commercial team which has been formed. This is to discuss the commercial terms underpinning it. And the third team which has been formed is the environmental team. The environmental team is important because one has to manage the effluent, the discharge of water into the oceans, and meeting all of the environmental standards. We expect to be able to sign the GSA. The Prime Minister has tasked us, both the President and the Prime Minister has tasked the team with signing a gas supply agreement by July of 2017. And we expect to be able to bring supply on in Dragon by 2019. So a lot of good things are happening, Rennie. So for Trinidad and Tobago, Angeline kicks in around 2019. Dragon kicks in around 2019. Juniper kicks in 7 weeks' time. That's in September of 2017. Truck has already come in with 200 million scuffs. That was around April of 2017. So one of the things that we are fixing is the gas supply. We are working very diligently to fix it. We've also seen a recovery in prices. From a TTNGL perspective, TTNGL's first quarter pricing has improved, Dominic, 42%.
42%.
So you're getting more production, you're getting better pricing, but we have to remain diligent, because if we do not remain competitive as a Trinidad and Tobago environment, shale gas is being produced at 240, 250.
Yes.
So we have to take costs out of our business. We have to focus on productivity, and we have to ensure that we have an environment which is competitive to be able to attract investment dollars to Trinidad and Tobago if we are to go further downstream.
The voices you're hearing on the one hand is Dominic Rampersad, who is the president of Phoenix Park Gas Processors Limited. On the other hand is the chairman of the NGC, Mr. Gerry Brooks. He is an attorney at law, served as the vice president of the Law Association of Trinidad and Tobago for 3 years. He's the MBA.
4 years.
4 years. MBA holder from Columbia University and chairman of the National Gas Company. That's the discussion we have this morning. In your chairman report, you said PPGPL and other local companies must continue to focus on cost containment, recalibration of strategy, re-engineering, and excellence in execution. I guess some of those are what you articulated a moment ago. There is a reality reality, however, that we are down the totem pole, as it were. So a lot of things that would determine where the price of gas and oil on another scale, where the price of gas is in the market is beyond our control. You, however, remain optimistic that it is navigationable over the short and medium term. What is the springboard of your optimism that we will be able, unless, of course, something disastrous happens on the international market, to continue with this trajectory that we have right now?
I am optimistic for a couple of reasons, Rennie. One is the recent BP find of Angeline tells us that the Columbus Basin, where we just discovered 2 TCF of gas with Savannah and Macadamia, which are probably going to kick in 2019, 2020, but that's subject to a lot of commercial work. I am very encouraged because what has happened there from a BP standpoint is new technology. When one takes a look at the way we're looking at the data, the seismic, that's substantially improved. That's like going from analog to digital and taking a look at the reservoir data and the well profiles. So that's very encouraging. The second thing that encourages me is the Shell's investment in Trinidad and Tobago. Shell acquired BG, a $5 billion organization. They acquired Repsol. And Shell, a $55 billion organization, Trinidad represents 19% of Shell's portfolio. It is very significant.
Very significant, yes.
So that's another area of encouragement. We have had a number of smaller players come into the jurisdiction, people like Perenco. Perenco acquired Shell, Repsol's small marginal fields. We have over 200 smaller marginal fields with between 80 to 200 million scuffs of gas. If we could liberate those, it helps us in terms of our production. So that's, and the wonderful thing about the NGC is a lot of that production is close to infrastructure that we already have. So that's another area of encouragement. We have Mitsubishi, which has just come to Trinidad and Tobago. We're working closely with Mitsubishi to put up a methanol plant. NGC is a 20% shareholder in that plant, which gives us one offtake in methanol. It's employing 700 people down in Labrie. What's important, Rennie, is that from a downstream standpoint and in terms of services, we have to ensure that we're competitive. Because we're competing with Texas, the Mexicos, and so forth to be able to attract dollars to Trinidad and Tobago and to build communities.
We may go into deeper water on that, but it's important that at every turn you have said we must. By the way, I did ask him for a springboard. I got springboards. I got that, and you keep emphasizing that very important thing of remaining competitive. It means that you cannot have your output surpassing quantumly what your input is, which means that your wages is something must be looked at. Your production is something that must be looked at. Your exploration tools, i.e. technology and so on, these are all parts of it. We do have the issue of wages. I'm going to get to that later on, but I just want to look at something that's before us today. On Thursday, oil prices again dipped to $46 a barrel, owing in part to the international oversupply, primarily from Iran and Libya on the one hand, and of course, as you mentioned, the shale production in the United States being up. With the high wage bill, I knew I'd get it in there somewhere, with the high wage bill, exploration hurdles, and low production, the challenges are indeed daunting. Last week, one of the dailies reported you saying re-engineering options are being considered for cash-strapped Petrotrin. In which direction you believe the biggest hurdle stands, sir?
I did not make that statement about Petrotrin. The chairman of Petrotrin is Andrew Jupiter. So I have been very careful to confine my statements to the NGC. But we both face the same challenges. You quoted oil at $46. That is true, whether you use NYMEX or whether you use Brent. Gas prices were actually $307. Now, one of the interesting things is that, remember, from a gas standpoint, while there's day-to-day spot in terms of gas pricing, we also have long-term contracts. And that's an area in which Dominic and the team, and our own team from an NGC perspective, has been able to see additional value and is a platform for growth. In the past, what would happen is that any additional gas available to us, which is sometimes called the Minister Share of Gas, royalty gas, we would not be able to export it ourselves. It would be exported on our behalf. One of the things that we have done is that we've introduced a commodity trading desk. And that commodity trading desk started in 2014 and improved in 2015 and 2016. We were able to see 3 to 4 times the value of what we were deriving before. Because we say NGC, after 41 years of excellence, we should be able to market our own product. And so across the portfolio in terms of LPG as well as any additional energy that is available to us through Ocean Atlantic LNG, we are now able to market ourselves and derive improved value. The other piece to that is, in terms of driving the business, we are taking a look at efficiencies across the chain. We're taking a look at efficiencies across the chain. How do we share engineering services? How do we procure better? And Dominic gave the example of insurance as one area of procurement. How do we bring we recently had something called a vendor forum. This is where we brought all of our vendors into the NGC and said to them, if we are to survive and to compete, we have to be far more efficient. Given that the price of oil and gas has fallen, it means that many related material prices have fallen. Freight has also fallen. So those are areas in which we are seeking to reduce costs by about 20-25%.
Let's talk about the optimism that TNT currently possesses the infrastructure that will be able to both attract and optimize foreign investment. It is one thing we have talked about, what has been offered as shares. It is one area we talk about the expertise that run our gas company. There is this encouraging sign from BP, from Shell, from other people that yes, this is a good place to invest. Do we have the infrastructure being set in place, at least from the side of the NGC, that will continue to keep us as an attractive investment in the world?
I think we have it from an NGC standpoint, but we are not being careless about it, and we've been thoughtful about it. Our pipeline infrastructure is about 1,000 kilometers of pipeline, and the uptime is 99.9%. You have emerging jurisdictions like Mozambique with 80 TCF of gas, Ghana, several on the African continent, Ghana, which looked at Trinidad and Tobago with 100 years of energy experience and 41 years of gas experience, and they are looking to Trinidad and Tobago for a suite of services. That suite of services includes companies, Rennie, like Tobago, Demas, Tucker. So it is not only the NGC, it is a whole value chain that we've been able to create here over the last 100 years, which is attractive to emerging jurisdictions. One of the things that we are doing from an NGC perspective is that we are taking an outward look. No longer are we going to be based purely in Trinidad and Tobago. So we are looking deliberately at external jurisdictions in which we can leverage our expertise in pipeline engineering, in port and estate development through our national energy company, in ship-to-shore services, on the upstream side in terms of equity participation. And remember, the NGC's balance sheet is $44 billion. It's not large by international standards, but it's not small and immaterial. And therefore, what we're doing is that we're saying we're going to move out of Trinidad and Tobago very carefully and deliberately into external jurisdictions where we could leverage our expertise, inclusive of the University of the West Indies and inclusive of the UTT. Because the University of the West Indies and the UTT have trained thousands of petroleum engineers, have a strong research capability. So our suite of services will include the energy service companies, Tucker, the Energy Chamber, Demas, Tobago, etc. It will include the university, and it will include the NGC portfolio of companies. That when you take a look at Trinidad and Tobago and the point leases model, the point leases model is the envy of emerging countries, because nowhere in the world do you see this compendium of methanol plants, this compendium of ammonia plants, urea, and what is a tremendously attractive industry. Those costs are already sunk in terms of depreciation, so it gives us a tremendous advantage in terms of operating costs.
Yes.
So we have to be diligent, smart, and thoughtful, but the NGC is also being creative and courageous to change its business model, recognizing the change in the gas architecture. And interestingly, if you take a look at the gas master plan, and you will see the response of Chairman Motley in the task force there, it reflects a lot of that very innovative, very courageous, very bold thinking.
11:33, you're inside Brunch. We have in Brunch with the chairman of the NGC, Gerry Brooks, and also Dominic Rampersad. Dominic is the president of the Phoenix Spa Gas Processors. For over 26 years, has experience in financial accounting, held various portfolios at PPGPL, including management accountant, financial accountant, and business development project leader. Brings me this question to you. Shale is a very serious issue. Mr. Brooks said a moment ago, talking about shale, you and your team been looking at the long term of this. Talk to me about this revolution, because what we know is happening is that a lot of companies in the United States are ramping up they're getting back in the business. Every time it seems as though developing countries and or OPEC find some way to bring some kind of equality, the Americans go like, we got some stuff standing by here, we pump it up. So they're pumping back up. Shale is back in a big way. How fearful are you that this situation will not put a stop or a major part stop in the ambition articulated by Mr. Brooks and by your team looking towards the future? This is to say the shale oil production in the United States. How are we dealing with that from our end?
Well, there are two aspects of the shale production, Rennie. One is the oil production. The other one is the NGL production. Because remember, the NGLs is what will compete directly with Phoenix Park. Mm-hmm. Now, the shale, one of the things that the shale industry has been able to do over the last 3 years is that they have become more innovative with their technology. They've been able to cut the cost of their production, mm-hmm. and they've been able to increase their production. So what that has done in the markets that we all operate in, it has really transformed our markets from being a supplier market to a buyer's market. So because now you have this elasticity of supply, mm-hmm. that is really driving supply and driving prices down. So in order to compete with that, you can't be fearful of it. You have to face it and you have to understand what they're doing, but you have to also understand your strengths. Mm-hmm. Let me give you an example of PPGPL. Phoenix Park right now, we process about 1,400 million cubic feet of gas per day. We have 2 billion cubic feet of gas processing capacity at our plant. What this means is that all this new gas that's going to come on into over the next couple of months will require no capital infrastructure additions to Phoenix Park. Right? So essentially what you have to ensure is that you manage your costs, you manage your efficiencies, but you also manage your markets, because those shale producers are targeting your markets. And that is where our strategies in terms of our marketing, our customer service, and creating a niche market for Phoenix Park and for Trinidad's product creates that advantage. So I'll give you an example. Trinidad's natural gas liquids production today is about 40,000 barrels per day. Mm-hmm. The United States is over 300,000 barrels. When they ship product, they're shipping product in huge cargoes, mm-hmm. in bulk. Mm-hmm. When we ship cargoes in Trinidad, we ship it in smaller cargoes. And the reason we do that, Rennie, is because our markets are small cargo markets. So we have to ensure that these niche markets that we have created over the years, Barbados, St. Lucia, St. Vincent, Antigua, Dominican Republic, that we maintain them in a manner that is very cost effective.
Our region must remain ours.
Must remain ours. Mm-hmm. It must remain ours. And we have learned over the years how to compete. I always recall back 15 years ago, when Venezuela was a net exporter of product. Everyone kept saying they're going to eat into your markets and they're going to eat into your markets. But we invested in our infrastructure and we invested in our customer service to make sure that we are able to compete. And what happens now is that every year when we put our product out for tender, we get 4, 5, 6 traders in the region coming to Phoenix Park and saying, we'll buy your product. Because of the geographical location between Trinidad and, for example, Barbados. Mm-hmm. It's cheaper to ship product from Trinidad to Barbados than it will be from North America to Barbados. So you do have that geographic advantage that gives you a freight advantage. And that is what you have to continue to leverage on and make sure that those things are preserved and that your customer service into those regions remain of such a high standard that your customers want to come back.
I am so happy that you came in here with Mr. Brooks today, because we said we would talk about the IPO and the APO, but there are just so many parts of the commanding height of the economy. This, inarguably, is one of the most important portfolios held by anybody, which is yours.
I want to come back to the shale question.
Mm-hmm.
We have a portfolio of gas. And one of the things that we're looking at is the domestic portfolio. We're looking at the international portfolio. If you think about Kodak was in the camera business, but when you look at people now with cameras, everybody is taking cameras on their phone. Mm-hmm. We have an opportunity, if we think about it, to say, do we want to treat shale as a competitor, or do we take part of our portfolio and invest in shale as a consideration if it meets all of the financial hurdle requirements and if it meets our operational requirements? So one approach is treat it as a competitor and don't touch it, and you could end up going the way of a Nokia or a Kodak, or you embrace it and say, this is a potential source of supply. it could add value to my value chain, and therefore, intelligently, how do we embrace it?
Let me just interrupt you for a moment right there, Mr. Chairman, in this area. On the one hand, we don't want to do the dinosaur thing, which you just articulated, but on the other hand, there are a lot of environmental concerns attached to shale. Is that a consideration here?
The environment is an important consideration for NGC, and that plays directly into the work that we do on CNG. In fact, we are moving the population from diesel and gasoline, those kinds of emissions, to more to CNG, which is the cleanest burning fuel. You'd have seen that we've partnered to introduce 13 new gas stations from a CNG standpoint. One is going to open very shortly on Tampuna Road and 2 others. And we adopt and we subscribe fully to the government's intention to move us to the 20 percentile level from a COP standpoint. So that's something that we certainly embrace.
So while I want to go along with you, as any right-thinking person will see the sense in what you're saying. Listen, this is not a competitor. This is an augmentation or a different direction or a move of technology. Let's go and worry about shale. But there are still some questions out there as to what its impact on the environment. Is that something that has been taken into consideration when one thinks in terms of, well, let's leave them there and die, as you said? Is that one of the considerations?
Well, I don't think that shale is going to remain there and die. If you take a look at
no, I meant when you said that if we don't take part in it, we will be left behind, like Kodak and so on. Quite so.
So I'm very grateful that you invited me to just clarify. The traditional gas supply, I do not think is going to remain and die. There is tremendous innovation taking place on the traditional side, both in terms of the technology, how one views the technology. BP, for example, uses the High Performance Center. Shell's reputation in technology and its innovation in technology is well known. We are also working very closely with the university on several programs, and we ourselves are revisiting our own technology and being impacted by technology. So the traditional industry is not going to die. It is going to continue to be the beneficiary of technology and innovation and creativity, and will improve its cost profiles competitively. However, what I just added is that we could take a jaundiced look and say we shall confine ourselves to the traditional space, or we may take a more innovative and creative approach and see how do we embrace other aspects of the value chain in our portfolio. And so we, from an NGC standpoint, are saying, let's take a look at the entire value chain and see how do we participate more fully. From a Trinidad and Tobago perspective, that question plays into a larger question of diversification. How do we diversify both within the energy sector and outside of the energy sector? Because remember, what we're aiming to do as a country is to get about 3 to 3.4, 3.5 continuous GDP growth, because at the end of the day, what we're trying to do is to provide a sustained growth path for our citizenry so that they can have a certain quality of life in Trinidad and Tobago.
That voice you hear is that of Gerry Brooks, and I'm going to expand just a little bit here, because since assuming your tenure as NGC chairman, you have said the NGC group of the future will not be defined by project overruns and cost escalations. You said it will be characterized by prudent investment, strategic geographic expansion, and new revenue sources in the value chain. My question is this: what of Petrotrin, which seems to be the antithesis of a successful energy company, when one looks at the size of the payroll and stuff like that? I know it was not part of where we said we would go this morning. I'm just curious to see, because I follow and I read all of your chairman report, and there is great optimism inside of there. One feels good to be a Trinidadian. One goes, this APU I must take part in. Yeah, I see the direction natural gas is going. I see this, but I see NGC as a whole, and Petrotrin is part of my whole.
Petrotrin is part of the energy sector and is under the direct province of Professor Jupiter. It has also been a subject of a recent report shared by P.S. Lashley. And P.S. Lashley has submitted that report, I think, to the Prime Minister and to the government of Trinidad and Tobago. Therefore, I wouldn't want to prejudge or anticipate or prejudice any comment that anyone else wishes to make on Petrotrin. I would simply say this. If one takes a look at Colombia as a model, Colombia had an energy company very similar to Petrotrin. And what they were able to do is, by using a company called Ecopetrol, to be able to rationalize and resuscitate that company. So there are models which is available to us as a country to say this perhaps could represent the future of the country. I am aware that the report has been produced. That report has been studied, and deliberations are going to emerge. From an NGC perspective, we have developed a strategic plan, and interestingly with the strategic plan, what we did is we had one group strategic plan which informs all of our subsidiaries so that there's alignment of the strategic plan. And interestingly, Dominic, Curtis Rampersad, Mark Lokwan, and Dr. Paltu all participated, as well as the executives, in the construct of this plan, the thinking of the plan. We have challenged ourselves to be bold and courageous in terms of trying to be innovative and creative. So taking expenses out of the business, looking at new pillars for growth in the business, internationalizing the business, and trying to solve the gas supply problem. And if one takes a look at our 2016 result, you'd have seen that in 2016, the NGC's profitability improved 20% in a year in which we had the lowest results. At Phoenix Park, Dominic's results improved by 15% at Phoenix Park level. Again, a year in which we had the lowest energy prices. So we are cautiously optimistic. Our conversations with the upstreamers have been very vigorous, as they should be, but also very professional.
Let us just be clear, listeners. The area that I just did a little turn on was not an area that we said we would discuss this morning, but I am happy that you made it very clear. Listen, this is put out here. It's under a different jurisdiction, and we will wait to see how that happens. I do want to come back to the AP with this out there.
Sure.
There is because I thought listeners would benefit from the explanations we had in the area of our gas supply, Phoenix Park, etc. And I want to go back to the initial part of our discussion. If we find that there is oversubscription in the individual area, what happens? That is, if it is oversubscribed, what happens then?
What we will do, remember 60% is reserved for individuals. So that means that you're about just under $500 million. There'll be a proportional reduction. So if it's 1.2 times, the inverse of that is about 0.8 or 0.85, 85%. You'll get 85% of the allocation. So if you had submitted a check for $100,000 worth of shares, and it's oversubscribed by 15%, then you will get the inverse of that, which is about 85% of what you wanted. So you get $85,000 worth of shares. So there'll be a slight write-down on the basis that you will still get your 2,000 minimum shares as a starting benchmark. If another category, however, is not fully subscribed, then we'll come back to the individuals and you'll get an increased allocation.
All right. So if for instance, the credit unions and so on don't fully subscribe to theirs, the allocation for them, we will take that and put it back, reconsider the question of putting it back for the individual investors.
Right. No, there is an allocation formula in the prospectus. So, and there are 4 or 5 buckets. One bucket is individuals, the second bucket is mutual funds, the third bucket is credit unions, cooperatives, the fourth bucket is NIB, and the fifth bucket is other companies. So if any bucket is not fully subscribed, you simply, according to the prospectus, spread any that is left over across the other categories.
This is a stake in your country. And this is the opportunity that each individual has. I'm going to go, first of all, to Dominic. Anything further of the Phoenix Park you think our listeners would benefit from hearing this morning that we have hitherto not touched on?
Well, it's just to reiterate that the company is now fit for purpose. It is lean and agile. We have a strong market. We have a strong operation. Rennie, our uptime on our plant is in excess of 99%. So it is a reliable operator. It can process any additional gas up to about 500 to 600 million cubic feet per day without incurring any capital costs and at incremental operating costs. And with the recovery in crude oil prices that we've seen from a year ago when they were in the $20 to, even though it's at 46, it's still a substantial increase from where it was. It has manifested itself in improved operating performance. The outlook for product prices is to be steady around between $45 and $55, somewhere around that range. And once we keep our operating costs and our operating efficiencies in check, we will survive, and we will continue to pay a dividend. You know, Rennie, last year when during quarter one, when crude oil prices were so low, Phoenix Park still paid a dividend every month. Every month. And so far for this year, Mr. Brooks, we've paid a dividend every month.
And you're only going to pay your dividend if you're clearing your expenses.
If we're clearing our expenses and we're paying those dividends in US dollars. every month we cut a check to the NGC and the other shareholders.
You don't have to sell me anymore. I'm attracting enough.
We'll take the check before we leave here.
I'm just reminding Mr. Brooks. I'm just reminding Mr. Brooks.
I'm going to leave the last word to the chairman,
Yes.
Mr. Chairman. Anything we have not covered this morning, as far as Trinidadians having one confidence in the trajectory of the National Gas Company Limited, in the trajectory of NGC as a whole, anything that we have not covered that you think is going to be germane that Trinidadians can walk out with on this Father's Day?
Just to echo Dominic's sentiments. Happy Father's Day again to all fathers. Rennie, just to say a special word to you, I grew up with Rennie Bishop and the Rennie Bishop experience in the 70s.
Amen.
You were always very professional. The music was excellent, and it helped to shape a generation. So thank you very much for that publicly this morning.
I'm going to put you on the spot on that in a moment. let me give the chairman his last word. And you see those days, I'm going to talk to him about something with that. Go ahead, sir.
Good. In terms of potential investors, this is an excellent investment. The dividend yield is the highest dividend yield in the marketplace, 7.14. What is attractive is there's an opportunity for further capital appreciation. I can see the share going beyond the 20s into the 30s and the 40s as prices begin to come back. And remember, Phoenix Park is operating at about 70% of its capacity. As more gas comes in, all of that goes straight to the bottom line. We have an excellent staff there and good leadership. They've done a good job. 20% normalized growth last year, 88.4 this year, and we see further appreciation. So I encourage all of Trinidad and Tobago, particularly individuals. This is a great opportunity to start your portfolio. If you have one, to continue it, to be the beneficiary of dividend income regularly, potentially US dollars, and to have something for a nest egg for yourself, and also to secure your children's education. So I commend it highly. Visit our website, ngl.co.tt, and let's get started.
The innovation goes to the bottom line and your profit goes to the upper line.
Absolutely.
All right. This gentleman, Mr. Gerry Brooks, said that he grew up with me. All right. You know, one of the areas, there's a song, and I'm going to ask you if you remember it, because every time we had a Father's Day, we would find some of the traditional Father's Day songs and play, but we were mindful, cognizant that there are many fathers who are not biological fathers. Many fathers who would step in and carry the mantle. And we want to salute them this morning. Now, I'm going to ask your memory here. If you could remember that song, or if you remember the group that did that song. Yeah, I got him stuck on that one. Winstons. The Winstons had a song called Color Him Father.
Okay.
You remember that? And Color Him Father. You see, I got him stunned this morning.
Absolutely.
You see? His mind is so locked into all this big management over here, he forgot that one.